Good morning, everyone, and welcome to our first ever Evergreen Tax Training Tools class. This one, I'm going to be sharing with everyone a free spreadsheet that I created. And the reason I created the spreadsheet is I get this question a lot from clients, and we do over 1,000 returns here at our firm. So I found it helpful to be able to answer this question quickly with clients. Often they want to ask me to look at their pay stub either halfway through the year or towards the end of the year, and they just want to know, hey, last year I owed a lot of money. I did change my withholdings at work, but I wasn't sure if the change was sufficient to make a dent on what I typically owe the IRS. And could you look at my pay stubs and give me an idea of if I need to adjust my pay stub further or whose pay stub I need to adjust? Often I feel like we tax preparers are a little bit of a marriage counselors here, as we have clients who are upset or they just want to know which spouse is not having enough taxes withheld. So this is kind of, black and white. It shows them exactly which pay stub needs to be adjusted. And so let's get to the spreadsheet. Okay, the first thing I do when I open the spreadsheet is I look at the prior year tax return. And again, the spreadsheet will only work 100% if the client's situation hasn't changed much. If their income has doubled from the prior year or has increased dramatically, then their tax rate will very likely change as well. So this won't necessarily be a perfect answer. Typically what I tell clients, if they want me to really give them a really good exact answer, I have to do a projection. And for that, we do charge you at our firm. A projection involves making a copy of their prior year tax return and doing a much more detailed evaluation of their current year data, where we truly look at and we enter all the data as if we were preparing their tax return. It's not much different than a tax return preparation process, and then we can give them a much exact figure for the federal and for their state if they live in a state that has a state income tax. I am reporting here from Vermont, and we do have a state income tax. I know some of my fellow tax preparers from Florida and Texas and some other states don't need to worry about that, but we very much do over here in Vermont. So let's run some scenarios. The first one, we have pay stub number 1. Oh, wait, before we do that, let's look at the prior year tax return. You want to pull in the total income and their total tax from the prior year tax return to figure out what their effective tax rate is. As you know, an effective tax rate is also known as an average tax rate. It's not what the top bracket is, it just means what the average bracket is. Some changes for 2021 to keep in mind is if they have children, their child tax credit might be increased. So that means that they might actually owe a little bit less taxes in 2021. So again, this is just a rough look at it. Then you also want to enter here in the yellow cells is where you're going to be entering data. I've tried my best to protect all the formulas, so hopefully nobody messes them up. If you do, no worries, just go to our YouTube channel and download another copy of the spreadsheet. So you would enter to start the total income from the prior year return. You would enter the total tax from the prior year tax return, and that would give you their federal effective tax rate. Then you would enter the total state tax from the prior year tax return, if that applies, and that would give you the state effective tax rate. Okay, then next you would look at their pay stub and you would enter their gross pay year to date, and then if they have retirement accounts that are pre-tax, you would enter that amount, year to date amounts. The same for medical insurance, dental insurance, vision, HSA or FSA, any amount that's coming out of their paycheck pre-tax, you would enter it here. And that would give you the total pre-tax deductions, and that would be subtracted from the gross pay, and that would give you the taxable income. So let's just say this client has been putting 10% of his gross pay in his 401k. So let's say year to date he's contributing $4,000. Just putting some numbers here. And let's say he has a medical insurance plan that costs him around $200 per pay period, and let's just say he's paid so far $2,000 for the year, just to fill in some numbers so you guys can see. So that brings this client's taxable income down to $34,000, and he has had $8,000 withheld year to date for the federal and $4,000 year to date for the state. That shows you this formula right here, where it takes their income tax withheld and divides by the taxable income to let you know what rate of the federal they are withholding and what rate for the state they're withholding. We know from above here what their goals are. From B8 and B11 is the goal. So this formula here, what it does is takes the difference between what they actually have had withheld minus what the goal was, and lets you know whether they're over withholding or they're under withholding. The green stands for over withholding, the red means for under withholding. Now let's just say you don't want to just look at the year-to-date numbers, you also want to see what the projection is for the pay periods that are left in the year. So here in this bottom section, you can put in the number of pay periods left, and you can enter their pay stub information based on that biweekly or weekly payroll. So if you just entered here, just as you were looking at the pay stub above on the year-to-date column, just look at this pay period column and enter the numbers here on the yellow cells. And that will, don't forget to enter the federal income tax withheld and the state income tax withheld as well for that pay period. And that will project what their income will be from that pay stub for the remaining of the year, and will automatically fill up here above. So after you do that for both spouses if they're married, or for both jobs if the guy's single, or if he only has one job, then just you only have to do this for one pay stub. Nice and simple. You can look at the totals here, and the totals will tell you, okay, year to date, or for including the projected amount for the remainder of the year, this client is going to probably owe the IRS about $5,355 and going to owe the state about $4,800. It just gives you an idea of like how much are they going to owe. And as you know, if you owe the IRS more than $1,000, there's interest and penalties. If you haven't met the prior year, I think it's 100% of your prior year taxes, or 90% of your current year taxes, but if their income is above $150,000, then the rule changes to 110% of your prior year. So it's always good to know what the projected balance due, because there is something they can do before the end of the year. They can beef up their withholdings at work and have their employer take more money out from their paycheck to go towards the federal withholdings and state withholdings. So it's a great spreadsheet. I love it. It saves me a lot of time just to analyze real quick a client's pay stub. I like to keep my meetings 15-30 minutes top. This is also a great spreadsheet that you can upload to a Google Sheet and then share with the client. So if you're not meeting with clients in person, this is a great spreadsheet that I use to share with my clients through Google Sheet, because we can both enter numbers together and they can see the numbers changing in front of their eyes. It's a great tool to work with them remotely, as a lot of us tax preparers this year have switched to. So anyway, I hope this spreadsheet is helpful to you guys. It was a pleasure sharing it with you, and I hope it saves you time. Please subscribe to our channel, as we're going to be offering not only some great tools in the future, but also some links to some other great tools that we are going to be selling through our new website that we are creating. And we're also going to be creating a bunch of funny videos to make tax preparers laugh, because let's be serious, our profession is very stressful and we all could use a little more laughter in our life. All right, have a great day. Bye.